So to wrap up the massive day today, really just what I'm going to be talking about today. Again, tune in tomorrow for Ford as well as Google earnings. We'll be looking at those. But Apple stock up 6% after hours after their earnings as well. So let's find the reason for that. Why is this stock up 6%? Well, if you must, and frankly you must, it's earnings report, baby. It's earnings report. Let's take a look. Quarter 3 GAAP EPS of $2.58, beat by 51 cents. Big beat. That's a big beat. And I know a thing about a big beat. You can call me Dwight Schrute. Revenue of $59.69 billion. That's right, 6.9. Don't forget about it. Up 11% year over year. Oh gosh. It beats by $7.13 billion. I sneezed my brain out, so if I sound dumb, that might be the reason. But here's a big thing. Obviously, massive beat on the revenue there. Massive. I mean, $7 billion of a beat. That's incredible to rise 10, really 11% in the middle of a pandemic, by the way, in which all of their Apple stores were closed, and they still rose revenue 11%. I just want to put that into perspective. So iPhone revenues, and I mentioned this too, the consensus was super low. $22 billion expected. They did $26.42 billion. I knew for a fact it would be higher. I didn't think it'd be this much higher, but services revenue, again, a beast, $13.16 billion versus a consensus of $13.13. And again, the key there is iPhone revenue. I mean, shoot, people were like this. The iPhone 11 is a lot more powerful of a cycle than people expect. I mean, it really is. The analysts want to tell you that it's not a strong cycle, but it really is. It really has been. And there is talks, obviously. Apple has confirmed they will be delaying the next iPhone by, quote-unquote, a few weeks. So that is noteworthy. Could lead more people to wait. Could lead more people to go ahead and just buy an iPhone 11 if they need a phone right now. So the potential's certainly there. There's no doubt about it. We'll take a look at that. But the board of directors approves a 4-for-1 stock split effective August 31st, pushing the stock above $400 for the first time. That's right. The stock is splitting. Are you kidding me? I find that pretty crazy. Following last quarter's lead, Apple did not provide guidance for the current quarter. Fiscal quarter 3 results beat analyst expectations, of course, as we mentioned there, off top and bottom line. As far as the other breakdowns, iPad was $6.6 billion versus a consensus of $4.8. iPads are doing super well too, and I think some of that has to do with really work from home as well as school from home. I think iPads are a good thing for parents to get their children, obviously, for this. And Mac's part of that as well as far as work from home. Mac, $7.1 billion versus a consensus of $6.03 billion. Massive there. Wearables still was a beat, even in the middle of pandemic where people couldn't go outside. They still rose wearables and accessories. $6.5 billion versus a consensus of $5.99. And services, as we mentioned. Services was a good portion of it. There's no doubt about it. We like to see it. We like to see that. So overall, we got suppliers gaining as well, from Qorvo to Skyworks to Broadcom. Here we have the press release, as we like to see it. We love the press release. Okay, don't you dare say I don't love the press release, because I love the press release. I prefer, I prefer the slides, but Apple doesn't want to give me the slides, so I'll take what I can get. So as you see for this company, record June quarter, that's right, record in revenue, driven by double-digit growth in both products and services, and growth in each of our demographic segments, says Tim Cook. Good to see that as well. Cash dividend as well of 82 cents per share. Pretty nice. Payable August 13th for shareholders as of August 10th. Now, stock split's going to be wild. I really don't like stock splits. For a company like Apple, I think it's fine, but I think a lot of times stock splits are a little rough. They devalue the stock, obviously, naturally, and especially 1/4 here instead of a half of a stock split. It's 1/4. It's interesting. So again, the goal is to make the stock cheaper for some people to buy. I just don't know if I'm a huge fan of it. So I really don't think I am. I don't know. That's really their press release was kind of weak, but you saw every segment rise. I love to see it. So give me these consolidated financials, so we can talk about it. We love seeing this too. Both product and services, you saw obviously good rise there. We love talking about net income. You know I love net income. So for the quarter, it was 11.2 versus the last quarter we saw, or last year's quarter two, we saw 10 billion. This year we saw 11.2 billion. So good increase in terms of net income year over year. I love to see growth in that. There's no doubt about it. You already know me. Net sales by reportable segment. You saw gains in every single segment for them this quarter compared to last quarter, last year's quarter. Oh gosh, the brain's not working. And by category as well, we saw every single segment rise as well. Every single sales category for them rose, from iPhone to Mac to iPad to wearables to services, and they rose quite a bit. So I'm pretty proud of that. Really excited for what they're doing there. And they rose, they've even risen that as far as 9 months ending is concerned. But really the 3 months, I just look at the quarter for the most part. Good stuff. For the balance sheets perspective, we're definitely going to look at this as we love to look at. We give a 9 months ending because it's Apple, so they do things how they want. Cash and cash equivalents went down around $15 billion, so it'd be nice to look at that. Total current assets, I'm really hoping they pay down some debt. That's my assumption. Total current assets of $140 billion versus $162 9 months ago, so they decreased by around $22 billion in current assets. Overall assets in general of $317 versus $338. So again, that $20 billion in assets did vanish. So I'm hoping that the liabilities we saw decrease as well. Now I will say, unfortunately, it's not quite the case in this scenario. Total current liabilities of $95 billion versus $105, decreased by 10, but total liabilities in general of $245 billion versus $248 billion. You didn't really see that much of a decrease. I do like to see a decrease, no doubt, but overall stockholder equity did decrease. It decreased quite a bit from $90.4 billion to $72 billion. So definitely a decrease in stockholder equity. Not the most beautiful of decreases, there's no doubt. You'd like to see a little better, but the balance sheet's still strong. I can't lie to you. Strong balance sheet. I like what they're offering me. As far as pricing on the stock, PE ratio around 30. Valuation is 1.6. Really right now after today, $1.7 trillion. It's an expensive stock. I can't lie to you, but I do think the stock deserves the valuation at the time. And again, it crossed over 400. I don't think it's a point to buy, right? That's my main thing I want to spread here is I don't think the stock is right now something that you should be buying. I did say anything around 300 was worth buying. That's all I can tell you. But right now, with the way that they've been able to succeed through pandemic, I say anything over really right around 350 is very good buy for you. This company is a beast and it's not going anywhere. I'm just being honest. Obviously, after the stock split, it'll be around 100 per share. I'll have to relook at valuation then, but I'll talk about that after a while after it happens. Definitely not buying Apple right now. The balance sheet, it doesn't scare me by any means, but it's not the direction I like to see. I like to see them growing that stockholder equity just a little bit more, but there probably were expenses, obviously, that were mentioned during this. We talk about really just a lot of stuff going on right now. So not a shocker, but really like this company. There's no doubt. I'm glad to have it in my portfolio. I'm glad to be up really over, doubling my money in this. So I love to see it.